This content is for educational purposes only and does not constitute investment advice or a solicitation to trade. Futures and options trading involves substantial risk of loss and is not appropriate for all investors. Past performance is not indicative of future results, and only risk capital should be used.
Welcome to the Cordier Commodity Report, where James Cordier breaks down what's really driving gold, silver, oil, and the global economy. We'll go beyond the noise to explain the cycles, data, and signals behind major commodity moves. Hola, I'm Joe Pardavila, and he is James Cordier. Hello, James.
Hello, Joe. Best day of the year so far today. Pretty thrilled about that.
Best day is relative, James, no matter where you are or how much you how much you have invested in the stock market and all of that other stuff. But James, I know you famously say you are Switzerland when it comes to politics, and I've for a long time have said it is impossible to talk about anything without politics getting involved, whether it's football, entertainment, the stock market, and now commodities. And for decades, leaders have optimized for the next election cycle. They're always thinking about and we've talked about midterms are coming up. What feels different about this current administration's approach?
You know, Joe, for decades, I always thought that the military, especially a strong military, the strongest that we have here in the United States, should be run by, military people. The fact that we have the strongest military in the world, they should know what they're doing. I always thought, why not let the military run the military portion and have a businessman come in and run the strongest economy of the world? It doesn't matter if you're Bolivia or Argentina or Colombia. You just put the strong man in who runs the military, run the company and the country too, because all they do is export illegal drugs and sugar. But when, but when you're running the United States economy, might be good with a businessman. For decades, I always thought, why do we have an oil family in Texas running the military and running the economy? Why would we have a South Side attorney run the military and the economy? Perhaps these are good ideas, perhaps not. But right now it feels as though we have a strong military and we have a businessman who makes deals. And perhaps we'll see how this works out again this time around.
It is funny, James, how I feel like, and I joke about this all the time, when the founding fathers created capitalism and the Constitution, also, I don't think they realized how big the United States was going to be and how big the economy was going to be and how rich people were going to be. And so, unfortunately, we're left in this world where, 200 years ago, sure, on paper, let's let these people be leaders because it's manageable. But man, now it seems like the amount of skills and the amount of knowledge you have to be a leader of the free world is a lot. And now it's incredibly complicated, and it's getting complicated by the day because of this intersection of the economy and war. So tell me about what do you think about the shift that's being made here? Is this long term? Does this worry you that what's happening now in Iran and the Strait of Hormuz, is this a short-term blip? Like you said, you've been doing this for a while, but do you think the direction that the country's going in now will have ripple effects way beyond this presidential term?
Joe, it's so interesting. Certain presidents and certain governors and senators, all they care about is what the media thinks about their last vote or the last move or what have you. For the first time in a long time, it seems that the current administration doesn't care. If the media bashes him for the next 100 days, I don't care. I've got the most votes ever in a presidential election, and they voted me in to do what I think is best. And sometimes what seems to be best is like short-term medicine. Joe, go back to the tariffs of last year in April. The current administration thought that we would be taking advantage from all of our trading partners. And when he peeled back the layers of the onion, we were. And he just said, no more. We're just not going to do this anymore. And the stock market fell and it fell and it fell and it fell. And he was just taking massive heat, Donald Trump was. And it reached a certain point that India made a deal, China made a deal, our other trading partners made a deal. And lo and behold, long term, 4 months later, the stock market, which was just tanking, is making all-time record highs. Maybe he knew what he was doing. And now, of course, we've got the Iranian war, and the current administration decided that they're not going to build a nuclear bomb. They're going to stop being the demise of so many people throughout the Middle East and throughout the Western Hemisphere. And he said, we're just long-term, we're going to try and fix this. And boy, just taking short-term heat. The price of gas is up $1 a gallon, and the price of oil is up to $120 a barrel. The stock market's falling and falling and falling. And lo and behold, someone drew a line in the sand this past week, and someone blinked, and it looks as though the negotiations on this war in Iran just ran its course over the weekend, and it appears that things are going to get a little better soon and a lot better over the longer term.
When you talk about this short term, long term, we joked last week about the sheep following the herd and and not like you talk about following the basics. When stuff like this happens, where it's almost like you don't want to say it's a crapshoot, but like when you're in the market and there are these short term moves that are probably going to affect the long term, how do you feel like the market is reacting to what's happening? Like just in a non-political point of view here, what do you think is is the market reacting correctly to what's actually happening in Iran, or is it an overcorrection? We've often joke about overcorrections, but like, what do you think about the market right now in terms of how they are being affected by the decisions made by the current administration?
On a short-term basis, there's a lot of mistakes being made right now. We were watching a volume on stocks and indices on Friday, and it had the largest volume day since COVID. Selling, put buying, which is fear, buying puts, buying protection against your stock position. It was also the largest on Friday since COVID. You just have to understand that the decisions being made right now, economically and throughout the Middle East, they're long-term suggestions. And so few people that are investing right now, Joe, have never seen this long-term ideas. It's what is this stock or that stock? What did they do last Thursday and on Friday? Well, hell, it touched the 200-day moving average. It's like, oh shit, the world's coming to an end. People don't understand long-term analysis. If the fundamentals of the economy, if the fundamentals of the world globe, as far as being protected perhaps by having a nemesis go to the sideline for a period of time, that's long-term very bullish for the stock market. It's very bullish for economies around the world. So many people are driven by what's going on right now, this past hour, this past day or two or three. People aren't used to that. And back in April of last year, people were selling, with abundance. And now we've got the war going on in Iran, and people are buying oil and buying energy and buying natural gas and buying crude oil. And it's just the wrong time to do that. It's on a short-term basis, it sounds really bullish. They bring on one talking head after the next on TV, and oil's going to 175 and it's going to $200 a barrel, which of course puts gasoline at $6 a gallon and $7 a gallon, just fear-mongering people, really making it difficult for an investor that watches these programs to make good decisions. You just gotta, be patient, chill, and look at the long term. That's what investing is long-term fundamental analysis, and making short-term bets based on, what you're watching on CNBC or Bloomberg hasn't been a good idea over the last 18 months. And I don't think it is now either.
When you see this kind of volatility in the stock market, and I know we've always talked about the importance of diversifying and being involved in the commodities, and clearly the oil prices are affected by this. But is there any trickle down effect in terms of other commodities when there's this much volatility in the stock market, this much volatility in oil? Do you see people either sitting out or being more active in those other commodities? And we've talked about what big a mover gold and silver has been over the past year, but like, do you see that there? Like, tell me about the equal and opposite reaction. Like, we see the headlines about the stock market But what is that actually doing to the commodities world?
Joe, that is a great question. People are watching the price of energy go up, and that's bearish for the economy. And people have been selling stocks hand over fist the last 10 to 15 days since the war was really starting to rage on. So they're making decisions based on energy going higher, bad for the economy. And there's always been a plan, I think, was to secure Iran, to help that part of the world. And here's one thing that a lot of people are missing, Joe, is that in Iran's heyday, it was producing 4 million barrels of oil a day, really helping out the global economy. They've been ratcheted down to like 1 million barrels a day. If in fact this ends relatively well, we could see Iran producing another 3 or 4 million barrels a day. Very good for the global economy, very good for the US economy, and very good for consumers. That's playing the long-term game. And the more often you do that and less the short-term game, I think investors wind up sometimes with a very good portfolio on December 31st and perhaps even getting alpha.
Can you explain why this paradox of the fact that I think anyone who's involved in the oil industry, whether you're in it or you're trading commodities on it, you hear the stat all the time. North America is producing more oil than anywhere on the planet. Why such volatility in prices when a small amount of it is being affected by the Strait of Hormuz? Because to me, I automatically think, oh, the price is going up because there's a shortage. But if we're producing so many barrels, why should something that's happening thousands of miles away in the Strait of Hormuz affect the day-to-day price? Is there a logical answer to that?
You know, it's a global market. That's the logical answer. The US used to be the largest consumer by far of energy, but now China, consumes the second most amount, and then India the third most amount, and Japan the fourth most amount. These countries produce very little oil of their own, but they're the largest consumers. That's why it matters. Here in the United States, we're the largest producer and consumer. It shouldn't make that much difference, but the three other largest consumers have to fight over those limited barrels that usually come out of this part of the world. And, 20-25% of that oil gets cut off from the market. That's a big deal globally, and not so much here in the United States. But of course, the United States is the world's policeman, and we're trying to fix problems everywhere, and we're trying to get the Strait of Hormuz opened. And then all of our European allies and India, China, Japan, they get to enjoy lower prices. I think starting in April and May, I think you're going to see oil much lower than where it is right now. And once again, everyone's happy. And, whew, that was actually a good idea when it didn't look like such a good idea when it was happening.
Yeah, it is funny, James. Thank you for explaining that to me because it is. I mean, I sometimes have this like isolationist point of view that I think a lot of people in the country do about like let's stop worrying about other countries and what's going on in the world. But it just goes to show you that even if we decide not to care what's going, like even if we weren't involved, if there was something else going on in the Strait of Hormuz, it would still affect the prices here, which to me is kind of crazy when you think about this idea of like being anti-globalization. That cat is out of the bag, right? No matter what we do, the rest of the globe is still going to affect our economy.
It is. I mean, Europe is our biggest trading partner, and we want their economies to do well. Japan, India, and China, we want them to do as well. Energy, Joe, as you and I have been talking for the last year or two, I mean, the price of a barrel of oil and the contents like goes into practically everything. Plastics, asphalt, automobile, transportation, jet fuel. It really propels the entire world. As much as everyone would love to just, attach the ability to use electricity and like run their car and run their house and run everything, that'd be great, but we're not there yet. So in the meantime, watching the price of a barrel of oil is very important for everyone. It dictates what foods cost and clothing costs and automobiles cost. It's a major component of inflation or lack thereof. And sometimes fighting over the value of that pays off in the long run.
When you talk about this switch from a short-term mindset to a long-term mindset, let's give some love to some of the commodities. if you are a long-term person and not so affected by what's happening in the headlines when you flip on CNBC, which commodities stand to benefit the most from having a long-term mindset when it comes to approaching investments?
Joe, a perfect example is what did just happen to energy prices here the past 3 weeks. We write option structures on commodities, and we have a long-term view that the fundamental analysis tells us that fair value for oil the next 12 to 24 months is $60 to $70 a barrel. When you have this large spike and all this fear that develops that happened in the last 2 weeks, investors, banks, individuals are buying call options at $200 and $250 a barrel. So if you have a long-term view that crude oil is worth $70 and not 200, that's an opportunity for firms like us that sell options on commodities using structures to protect the downside. But oil's not worth $225 a barrel; it's worth about 70, and that is how you create alpha in an alternative investment versus just buying stocks and holding.
We've often joked about how long you've been doing this, James, and you talked about how the way you consider how leadership has changed over the course of your career in terms of the White House. But are we entering a new cycle where government policy drives demand more than traditional market forces, like the things we talked about in the past? Weather, supply and demand. Have we just gotten to a point where the governments, whether it's the states or anywhere else across the globe, that they are putting more of a thumb on the scale of the economies around the globe, as opposed to what normally it would be? The things we've talked about, dry seasons, wet seasons, shortages. Is this a new era now where we're at, where the governments are now going to drive these prices more than ever before?
Actually, I don't think so.
Okay.
We've just never seen anyone try and take control on a short-term basis and try and do what he or she thinks is a good idea. So often, administrations and people in power are so worried about the short-term effects and what the media thinks about them and the next election. When you're talking about 350 million people in the United States with the biggest pocketbooks in the world, you've got 1.2 or 1.3 billion people in India and China. The demand from all these individuals in the population, that's what dictates the economy. That's what dictates the price of, a paperclip, as Gordon Gekko used to say in Wall Street, the price of corn or a pound of copper. It's dictated by world demand of the billions of people with dollars and yen and wands, and they vote. And that's what determines, the price of, different commodities and if the stock market's going to go up or not. And having a business outlook on things, I think, is going to turn out to be very prosperous for the world economy. And while we're not involved with the stock market, we don't predict whether it's going up or down. The stock market's going to probably do, quite well now over the next 12 to 24 months, I think. And what we do is we don't try and advise someone to not be in the stock market. We don't simply do that. What we do is an alternative to being, buy and hold in equities with a portion of a portfolio, so that you're not just in one investment. We look at the stock market perhaps as a good buy at this point. It's really fallen down a lot, but we want to be an alternative to that on a small portion of someone's portfolio, which has worked out quite well, actually.
And the subject of portfolios, if someone hasn't adjusted their portfolios yet, what's the biggest mistake they're making right now? Because you often talk about standing pat, but is now a good time to change things up a little bit portfolio-wise, or is it more that standing pat? What's your take when it comes to the portfolio and the mindset you take when it comes to dealing with dealing with life right now? What's the biggest mistake they're making if they're not adjusting it?
I think that investing is very personal. You never have someone ask you a question, well, John, here's what you should be doing. Or Joan, here's what you should be doing. It's not like that. Investing is personal. You don't know what's in their mind. You don't know what their background is. They may have a strong risk tolerance and they may have none. And some people are looking for alpha and they're willing to take a risk in order to, get that delivered to them. And other people think, wow, T-bills are up to, 4.5%, 5%. I like that. So, very personal that way. What we like to do at our company is when we choose clients that we want to work with, they have a long-term perspective. We're trying to deliver alpha for them. And the clients that we basically speak to before they become clients is ask them, do you have a long-term outlook on what we're going to try and accomplish? And if they're going to look at their statement every day, every week, every month very closely, what that does is it develops an uncertain atmosphere for what's the long-term goal. Alpha is delivered on December 31st. It's not delivered in the second or third week of March or, on the 4th of July. It's buying into the investment and not worrying about short-term ups and downs, and yet looking to hopefully get alpha delivered to them at the end of the year. When we handpick sometimes, our clients, we make sure that that's their outlook. They all want to get alpha on their investment. They just need to be able to ride through the ups and downs, and then we have a good relationship from that point forward.
Tell me about these relationships in terms of their engagement. You mentioned the fact like, hey, stand pat, December 31st, that's how we know, that's how we're keeping score. But how do you, because some people are going to be more engaged than others. I'm sure some people you probably hear about, like you're the accountant who hears about who hears from their clients around, every February or March, and then they're okay. Tell me about these relationships when some of your clients need more engagement than that December 31st check-in. How do you gauge how much like white glove treatment or actual interaction that you do need to make them feel comfortable in the investments they're making?
We have a monthly newsletter. It really describes what we see in the market, what's happened in the past, what we see coming up in the future, where we think we see opportunities that might be budding in the future, and their current holdings. So we stay very close in touch with our clients that way. And of course, anytime they want to get on the phone and chat, we certainly welcome that. We don't necessarily need our clients to be option experts on commodities. As a matter of fact, they don't need to be. What we're simply doing is delivering an alternative investment to what they have right now. Instead of being along in video with the rest of the world, a lot of our clients just want to take a portion of their portfolio and do something else with it. And certainly trading options on commodities is doing something else with it. And just having a little bit of risk tolerance goes a long way when you're trying to have an alternative investment to what everyone else has on. If NVIDIA is falling, well, all of your friends it's falling for them too. So sometimes there's comfort in that. And we often pat our clients on the back because if you're at a party or you're out to dinner or you're having a cocktail somewhere, you're going to hear people talking about Apple and NVIDIA all the time. Shit, it's down again. It's down $10. It's down another $5. But we pat our clients on the back because they're not out to eat. They're not out having a cocktail hearing, well, my short option portfolio did this or did that this week. Our clients have a little bit of fortitude, intestinal that is, and sometimes that pays off.
What's it like when you do have a client that needs a little more handholding? The monthly check-in just does not work for them. They need a little more than that. Does it happen? Is it uncommon, more common? Tell me about that relationship with folks. Because again, not everyone's going to be created equal. Not everyone's going to just love that monthly check-in. Some people may want some more hand-holding. Tell me about you deal with those scenarios.
Joe, optionspreaders.com is a boutique. We're not Ken Fisher. We're not Charles Schwab. We don't have and won't have thousands and thousands of clients. We're a boutique. We know our clients by name. Sometimes when they call in, our girl, Crystal, answering the phone, thank you so much, doing such a great job. She knows people, by their first name, even though she calls them Mr. Jones or Mr. Smith. She knows who they are, and they know her. And, we're available all the time to discuss portfolios and what we see going on in the market. we'll always be available to do just that. And we really like that. It's our clients, we don't consider a number. The only number that we care about them, again, is creating alpha at the end of the year. But we know all of our clients extremely well. And I don't think we'll ever get too big that we don't. And we like it that way.
That's awesome. Great here. I can't let you go this week without talking about the media's relation to the economy and the way they're covering it. You, as much as you love the media, you're also very critical. What's your feeling? Give me a vibe check in terms of how the media, business media, obviously, is covering the conflict in Iran and the roller coaster on the markets. Tell me about what's your take recently and how they're covering it.
There's two takes. One take is that's what gets your clients to call. It's because they are watching the business stations, and they have a guy come on and oil's going to $200 a barrel, and we just sold the $200 calls. So the media will sometimes cause some of our clients to call in, but what the media does that's valuable to us is they help create low-hanging fruit, because the fear that they help develop is what allows us to, write option structures at these levels, because people are basically buying fear. And once there's a crescendo coming along, on Friday night of this past week, I text a friend/colleague of mine, and I said, this feels like the very end of the tariffs last April, where we're trying to do an extremely good thing for the globe. We're trying to do an extremely good thing for peace and for economies around the world, but it feels like the collateral damage is just getting to be a little bit too much. And I mentioned to him on Friday night that I think this is about to wind down. And sure enough, on Monday, this morning, it did wind down. And, peace, I think, is going to be breaking out here in the next 5 to 10 days. And this is going to hopefully turn out to be a good exercise that the United States and its allies did.
Excellent. All right. So wrap things up. We've given a lot of love to oil and energy and all that jazz. Any other commodities we should point out here the week of March 23rd? Anything you're seeing out there that you like the way it's heading? Things on track? I know the weather has not been crazy around the planet, which is really weird. I know in the commodity world has been pretty steady. Anything you want to point out before we sign off this week?
We definitely do. There's been a big rush to get into the safety that is the U.S. dollar ever since the war started, and that has put downward pressure on precious metals. Silver's, cut in half. It reached $120 an ounce earlier this year. It's down into the 60s. We think that's a bargain. The gold market is in the low to mid 4,000s. We think that's a bargain. So copper, we think, is a good buy right now. So it's just ebbs and flows. You had a very strong U.S. dollar during this conflict. Perhaps it's winding down. I don't have a crystal ball, but perhaps it is. That might spell the top in the U.S. dollar and the bottom in precious metals. We see put premiums in silver at around $30 and $35 an ounce, which is very attractive. And that's what we're going to be putting to work this week and next, is put structures far below the price of gold and far below the price of silver. Gives us some wiggle room if we're not hitting the low just right. But silver in the 60s, if it got down to 50, boy, I really love that. But going long by selling put structures in the 30s, I think is going to be a really good bet later this year.
Nice. I love that we ended on a high note, James. I know we navigated dark waters, but we're ending on a high note. Talking about how good silver and gold is looking. So that's awesome. Folks want to connect with you, they go to jamescordier.com or go to CordierCommodityReport.com. James, as always, it's always a pleasure. Hopefully by this time next week when we chat, everything in Iran is settled. The oil prices dipped to below 100. And I feel the optimism come out of you, James. I feel like you think that's the way we're heading.
You got to call them the way you see them, like my mom used to say, and that has stuck with me, and that's what I'll always do.
Awesome. James, I'll see you next time.
Thanks, Joe.
We hope you found this discussion informative. This content is for educational purposes only and does not constitute investment advice or a solicitation to trade. Futures and options trading involves substantial risk of loss and is not appropriate for all investors. Past performance is not indicative of future results, and only risk capital should be used.